Deliverator for just-in-time home delivery of food and supplies, the Rapid Responder for emergency response and security.
Hey guys, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. As if you couldn't tell from my intro video, we're talking about FUV, ticker symbols FUV, Arcimoto. So this stock closed today at $7.35. It was up 0.55% today. Market cap, a very small market cap, only a $231 million market cap company. So this is a very small company. They are in their very, very beginning stages of production. I believe they only started delivering vehicles, I think at the end of 2019 or the beginning of 2020. So, this year was the worst year to start making deliveries. They had to shut down production, but they have started ramping up production again. Like I said, a very small market cap company in the beginning stages. So it's very exciting, this EV electric vehicle company targeting a whole different sector, a sector that really hasn't been targeted in the past. So like I said, today stock closed at $7.35. I talked about this company about 2 months ago. It was the first video I made about the company. I said I was bullish and I think it is a buy. So we're going to talk about what they have been doing, for the past couple of months throughout the summer. So first of all, they did a lot of capital raises. They were able to get $8 million in the beginning of June and for a stock price of $3 per share. And then at the end of June, they did another $8.5 million raise for $5 a share. And then in July, they did a $10 million raise for $7.30 per share. They also were able to retire a lot of their debt. All this movement, a company that raises a lot of money now has a balance sheet that is, very, very strong. They're able to sustain themselves for well over a year with the amount of cash they have on hand, and they retired a lot of their debt. So this is a company in its very beginning stages to really start ramping up production, really start making deliveries, and it's very exciting to get into a company at this stage. You don't want to get into a company that is already making a lot of revenue, already making a lot of deliveries, because by that time the stock is probably way overpriced. So if you could get into a company in these beginning stages, when you could spot them making these moves, like I said, making these moves, getting rid of their debt, raising a lot of cash, and still able to maintain a pretty strong stock price. They diluted their shares 3 times over the summer, raised roughly $20 million, and their stock price is still holding up strong. I think it's up like 300% for the year. So this is a company that when you look at it, these are all the signs that this has very, very strong potential to be, a triple up, quadruple up, 5x your money in maybe 2 to 5 years, I would say, in particular for Arcimoto. So we're going to talk more about what they're doing, what their ramp up is. This is their balance sheet. Like I said, they fortified their balance sheet. That's what they've been focusing on. That's why I love the management team. Mark Frohmeyer is the CEO. He's the founder and CEO. He's been working at this company, working to bring this company public not public, but for mass production. I think it's probably been, I forget what it was. I think it's more than 8 years. So this year was actually the first year that they really ramped things up and started making deliveries. So here's the balance sheet. Very, very strong balance sheet. Love this balance sheet. Cash and cash equivalents as of Q2 of 2020 is $7.7 million, and it's actually a little bit higher than that because I don't think this calculates for the last $10 million capital raise that they did. So total assets, $19 million. Short-term debt, they only have $2.9 million, and long-term debt, $4.7 million. So they have 3.8x assets over liability. So that's a fantastic balance sheet. Like I said, very, very strong balance sheet. This is a company that is ready to pretty much like take over the world. That's what they're aiming for. So with all this balance sheet and the company being much stronger than they were before, they were able to remove the going concern from their SEC filings. I'll just read this. The substantial doubt about the company's ability to continue as a going concern has been alleviated based on management's belief that the current cash reserves will sustain operations in excess of 12 months. So here is their financials. So, like I said, they only started making serious deliveries in 2020. So the revenues are not going to be that high. But, revenue of Q2 of 2020 was 255,000. Other revenue was about 13,500. So their other revenue, I believe, is their rentals. Like, they rent their vehicles to other companies, and then those companies like rent them out to other people. It's kind of like if you wanted to rent one of these vehicles to do a gig, like if you wanted to be an Uber driver but you didn't have a vehicle, you could rent one of these vehicles and be an Uber driver. If you wanted to do deliveries, but you didn't have your own vehicle, or you didn't want to use your vehicle, I don't know, because you have a gas guzzler, you could rent one of these, small, efficient vehicles and do your gigs. And you're probably, if you have a big gas guzzler, you probably end up making more money by renting one of these vehicles versus using your own. So that's what other revenue is. So number two, total operating expenses. So their operating expenses are decreasing. It was 3.7 million same quarter of last year in 2019, and down to 2.3 million of this quarter, our Q2 of 2020. And so they are not a profitable company. Like I said, in the very beginning stages, so we don't expect profitability. Net loss was 3.7 million for Q2 of 2020. So these are their vehicles. Basically, it's on the same platform. They have 3 vehicles strategically targeting different sectors. The first one is the FUV. That is for like the commercial, sorry, not the commercial, but the retail side of their business, selling to anybody that wants to buy it. You, me, just somebody for a daily driver, someone that wants to, live in a city area that has, difficult parking. So a very small vehicle to get in and out of the city easily, in and around the city easily. So that is their FUV, their fun utility vehicle. That is also the vehicle that they're using to target like rentals. Like imagine if you go to a hotel, they will already have all these vehicles ready for you to rent. So that's the market that you're targeting with the FUV. It's the fun utility vehicle. So you can imagine, going to a destination, going to a resort, and you'll be able to rent these vehicles. Their other vehicle is the Deliverator, and so that is targeting the last mile delivery. You think about like Amazon delivery, food delivery, Uber Eats, very small footprint vehicle, get in and out of small parking spaces, downtown areas. So that's their Deliverator vehicle. And then the last one is their Rapid Responder, and that's for rapid response for EMTs, for firefighters. Think about like in a downtown situation again, or think about like in a football stadium or a baseball stadium. You're not going to drive large trucks in and around. It's very difficult with a lot of people. So, this is a perfect solution for rapid responders to, respond to emergency, to get in and out of a crowded area very, very fast. So, like I said, very strategic in their deployment of their vehicles. All right, so basically this is their platform. It's a really simple platform, really easy design and easy to manufacture. So this one platform is targeting the daily driver, like I said, last mile delivery, rapid responders, and just fun, just to rental, just to, for vacation purposes. It's dual motor in the front, and all EV electric vehicle. So. One of the ways that so I think probably the most difficult part of this is selling the vehicle to a person. Like, I think it's something like if you drive it, you're going to realize how fun it is, how smooth it is, how fast it is because it's an all EV vehicle. You get the instant torque, but the hardest thing is to get somebody to come over here and try it. So what they're doing is targeting rentals. So they are partnering with a company out of Los Angeles called Hire Car. So Hire Car, they basically rent out vehicles for people to do gigs. Like I said earlier, if you wanted to be an Uber driver but you didn't have a vehicle, you could rent one of these vehicles and do your driving. You could, if you want to do deliveries, last mile deliveries, whatever it is, you are able to rent these vehicles. So they're partnering with Hire Car, and that way they're actually getting revenue for people test driving their vehicles. So I think that's a way to go. That's a genius way. And so instead of having a lot of sales and marketing, if you partner with these rental companies, basically that's all the sales and marketing that you need. You're going to see these vehicles all around, and people are going to be naturally curious about what they are. And in the same time, Arcimoto is going to make decent revenue from these rentals. So their ultimate goal is mass production, and they're in the very beginning stages of mass production now. They have partnered with Sandy Munro from Munro Associates in order to bring mass production online and a lot quicker in order to cut costs. So their goal is to make 50,000 units per year within the next 24 months. So mass production, that is the key. It's easy to make, a few vehicles, 10 vehicles, but to start making thousands of vehicles, that's going to be the real key. If you're able to get over that threshold into mass production and become profitable, that is the next stage. So we will see if they get there, and I promise you, if they do get there and be successful, this company is going to take off, and that's just my opinion. So that's why I'm interested in it now, before they reach mass production, before everybody knows about them. That is when you could get in at these prices at $7 and under. So speaking of prices, this is my cost basis right now. I am up to 204 shares at a cost basis of $6.21, and I am up about 18% right now. So I've been buying multiple times in this all throughout July, and then about additional in September. Cost basis anywhere from $5.40 to $7.25. And I will continue to buy this as long as it's like under $7. I'm looking to get this. Hopefully it might take a dip again, and I would like to pick up more in the $6 to $5 range. And so I'm looking for more dips on this one. That's the way I plan to play it. Guys, I hope you enjoyed my video. Hope you found some value. What do you think about this company? What do you think about Arcimoto? They're targeting very small form factor vehicles. They're very different from the traditional vehicles that everybody drives. So let me know what you think. Give me a thumbs up, really helps out the channel. Consider subscribing if you haven't yet already, and I'll catch you in the next one. Peace.